Good afternoon. This is Fari Hamzi from Hamzi Analytics. It's Saturday, August 29th, and this is a market timing video. Before we start here, there are two items of housekeeping nature I want to go over with quickly. One is that I've started to write a little bit for Seeking Alpha, putting some trades on, some opinions, so on and so forth. And the way you can follow me there is by joining their list. We put a button on our homepage. You can simply click on it, takes you there, and you click a follow button, and you'll be made aware of some trades, some commentary, some insights, if you will. The second item is that come September 1st, our educational webinars will be restarting. We have a whole slew of speakers in mind for you, and including some webinars that I do myself on Saturdays. And the best way to get invites to those events is to be on our MSA list. And if you're new to our website, the way you join our MSA list is through our homepage. Simply put in your email twice, first name and last name, and hit a button. And following that, you should be getting an email from us in your inbox. You need to confirm that, and then you're part of our list. Now let's start with the charts. My favorite chart is timer chart, and here we're looking at SPX and NDX against their, if you will, market internals, which is advanced decline and up and down volume. As you see here, this week we've been in a very tight range, kind of sideways action, a lot of up and down tests during the day, but pretty much unresolved, if you will. Very kind of ambiguous closings, kind of flat for the week. We really haven't done anything great this week. Now internally, the advanced decline has been shrinking, just slightly up and down. Volume picked up on Thursday and Friday. Part of that had to do with Intel. Now, on the CI indicator, we're actually seeing a bearish divergence forming. And when we get to our SP1 chart, we'll look at it a little bit further. But yeah, this is a little bit of a alarming in the sense that we should be taking a pause here. Seasonality wise, it makes sense. We're getting close to a part of a year that volatility comes back in the market to quite a bit. And also, we've been getting close to that 1050 number I've been talking about. So on the SPX, which is what Phil Erlanger brought up back in, I believe, February or March in Chicago, talk he gave on Bloomberg offices. So all being said, I think a little bit of a pause should be anticipated here. For the record, we have QQQ puts in one of our programs. So this is September Qs, and so we're expecting a drop here on the Q side. Now, quickly on our Wyckoff chart, again, now you see Dow Jones, you see Comp Q. Basically, again, not a huge move. Pretty much in the channel, +1, +2 channel. If you look at the transportation index, a little bit down for the week, and for risk, kind of sideways. So which is as depicted by Russell 2000, our small caps. Volume was so, really nothing great. It was a typical August, summer volume. So nothing to write home about. Now, let's talk about vol indices. The vol indices, they have not gone through the 23 area line I had in mind. We dropped below it, we closed above it. So this has been kind of dormant there. On the high tech area, in the VXN area, we dropped lower, but notice we bounced back right off -2 sigma. Basically, overall, vol has been going out which sets up possibly for reverting back to a higher vol, which will be coincide with September being a bigger volatility month. Uh, my favorite chart, SP1 Momo. It's favorite of some of you guys too. I know. Um, Basically, what this one does, I want to concentrate on really this part of it, the second part of it, which is you really see the modified uh, advanced decline and its volatility as measured by signal channels versus Momo, which is the short-term version of advanced decline. And again, as you guys noticed me talking about these in the past, but for example, in March we talked about a market reversal on the, I think it was March 7th, and it came on March 10th or March 9th, the following Tuesday. I think March 10th actually, on Tuesday. It was based on these two signals. Again, we talked about it in early May that we should see a market drop, and we did. And now we're actually getting a fairly strong run up in terms of the post Meredith Whitney call. The angle of um, the modified advanced decline has been pretty sharp. As one of my classmates likes to say, the slope of the slope. It's pretty hard. So that has been going on very hard while the short term advanced decline data has been deteriorating. So we're getting set up for a fall. So best thing is, um, you know, make sure your seatbelts are on. Those are playing it kind of slow. Those are trading faster, like on option futures. Make sure one hand is on the ejection seat. Uh, but this concludes our video. Have a great weekend, and we'll talk to you soon.